PD for the tax agent also. Let's see how it will be moved forward. Anyhow, today our topic is the computation of the taxable income, and the first point is deduction. Under deduction, we already understand the first part, allowed expenses as per Article 28 of the city law. There is a 5 item under this article is allowed. So that is the first we have to look into the item, the transaction. Item means transactions. This is wholly and exclusively spent or incurred for the business purpose. The second, not in capital nature. We have to see the expense, the transaction that we are recording as expense is not capital nature. These are the tests that at the transaction level, our accounting team have to look into that. They have to think in this way. So if they are thinking in this way, the data point, the transaction book in the system, same time you can notify even the person working in an accounting department, he can trigger this point to the tax department or tax accountant. So because this learning will continue and you will improve your career, improve your skill also. Even many participants are the many when we met with them, they think, okay, we are working in accounting department. So what is the benefit to learn the tax? See, the benefit, continuous professional development in any profession is required. Even as the accounting, if you start focusing, start learning, of course, the career will move upward. Your skill, and by maybe after 1 year, you are tax accountant, you are supervising the 2, 3 accountant, or in any other, you will get the growth in terms of the knowledge, in terms of skill, and in terms of the monetary benefit as well. So the tax accountant have to focus on the wholly and exclusively, not capital in nature. Accounting, according to tax period that we discussed, we have to record the relevant amount of expense in the relevant period, not in personal in nature, because it's personal in nature means it's not belongs to the business. Allowed expense as per ministerial decision. Here we have to see either this expense is allowed for as per ministerial decision or no. Okay, so now we're gonna start the B of the two part of the deduction. One is allowed that we already discussed. Now the second is the B add back. What does mean? Disallowed expenses. Disallowed expenses that already deducted are minus. Okay, Rehan, see I'll try to look into that in the common audit referential statement. So I'll share with you the data. Maybe the next session we can start from there. Let's try, but it will be challenging and time taking. Challenging is not in terms of we cannot do that. The remotely online, it will be time taking. Okay. If on site, if the participant, okay, if the participant is looking in this way, I will try into that, but online it will be challenging. Okay, I can have the some data on the demo basis and the common data. So let's if the participants are interested in this, so let's assume instead of for only the participants who are keen to have this, so we can on site 10 o'clock. You must be reached. You can coordinate with the Atif in terms of the on site and register with him, and we'll see how many participants are interested and will be on time. Why 10 o'clock? Because 1 hour before we will spend on this. We given the data, we discuss on that. And while doing this online and this our routine activity, you have the understanding from where to take the data, how to fill up the data in Excel, what to do. So that will be continue. It will be the same data and the same way after the end of the session. The same we will sit and we will review and discuss, okay, what are the understanding you took or you fulfilled during the training session. Because the core part of this from 11 to 4 that will remain on the same track. Why? Because our journey is long. Our journey is long. Of course, this is the additional. If people are interested, I'm available. But subject how you are committed with this, because nobody can give you this learning if you are not wish to invest or take the opportunity. What I'm giving, this is the lifetime opportunity. No one give you this opportunity. Take the opportunity, grab the opportunity, and show your commitment. And let's dive into that. You can coordinate with the Atif, whoever I look into that in this parameter. Of course, you will have this activity, the fruitful, but show your energy, show your commitment. But in terms of the understanding, we will continue the same parameter, but we are discussing during the break, before and after, it will be helpful. Anyhow, I'll print the demo data, financial statement and kept ready. And that the participant who are joining, you start from there and it will be discussed face to face also. Anyhow, let's come back to the topic and start, continue from the same, add back. So here I'm going to take the example, let's say the accounting profit. Okay, I'm using some abbreviation accounting profit. Let's say accounting profit is a 5 million. Accounting profit is a 5 million. So now we are starting from here. So what we have to do, add the expense in accounting team, they deducted, they minus. Let's say I'll take gross profit. Let's say the gross profit is 6 million. So there's a couple of expenses they already minus. Let's say 1 million they already minus by accounting team. So now we have reached accounting profit. So now we are moving towards the taxable income. So we have to see the activity is the expense is allowed or disallowed. What is mentioned here? Already minus. So what does this mean? Already minus. This is already minus. So that's why we reach here. But the tax authority is saying disallowed. Disallowed means not allowed to deduct. Not allowed to deduct. If not allowed to deduct, so we have to add back. It is the same, but we already minus in accounting profit, but will be add back. GI is a general information. Okay, here's many point we are discussing for understanding, and the same point will be come in the learning quiz also, learning quiz also, because we are testing and we are trying to keep the same quiz in the learning also. Qualified public benefit entity registration started on 23rd of October. When it started, it's have the meaning. It have the meaning. It requires the definition, but not commonly. But for the corporate world, yes, it's complicated, and they need to know such things. Okay. Uh, Tax accountant will take financial statement start from the accounting profit. The same point what we discussed. What is the role of the tax accountant? Will take the financial statement and start from the accounting profit. The same we are saying. This is the accounting profit. Here the city law is coming up. Qualified free zone have non-qualifying activity and qualifying activity. So the interest capping rule or limit will be utilized against the non-qualifying revenue without any split between the activity. This is we're going to discuss that, but this is the information, this is the technical point that we added on multiple slide that you're going to understand gradually. I can explain over here. So here the interest. For the free zone, the difference, as earlier mentioned, we share the two return. One is the free zone, one is the LLC. So at the same time, depends upon the transaction, depends upon the activity. So here will be two return parallel. Two return will be parallel we have to do. Why inside free zone is called the taxable income, taxable revenue. And here will be the qualifying activities, qualifying income. This leading to 0%, this leading to 9%. So here they're saying the qualified free zone person have non-qualifying activity and qualifying activity. This is the non-qualifying. So if we update taxable activity, taxable income. Okay. So another term, taxable income. Qualifying activity, that already meeting the qualifying free zone definition. So interest capping rule, a limit will be utilized. What is the interest capping rule? Against here only. As minimum safe harbor is at 12 million. So this 12 million can be used here or here. They said it will be used over here because this is already zero rated. So it will be no benefit over there. This is the advantage given to the free zone. You can utilize your qualifying interest capping rule against the taxable income. Non-exhaustive list of non-deductible 12 item as per follow. Now under that non-deductible, as here another point, key follow, this is the challenging and understanding. First, we are discussing the 8 adjustment. What are the 8 adjustment? Which are the 8 adjustment? Which are the 8 adjustment? These are the 8 adjustment. These are the 8 adjustment. If these are the 8 adjustment, under this adjustment, how many further adjustment? How many further adjustment? So here now we are discussing the 12 item. See, this flow or this structure or this frame is very important. This framework, if you understand the framework, later on we're going to build this each item. But how you will understand this is correlate to where? It will be closing up where? It's linking to where? So this is the important. So now our today topic is here. And inside that, so non-deductible expense, we are discussing the 12 item. So which are the 12 item? These are the 12 item. Donation, gift, grant to non-qualifying public benefit entities, illegal act, fines, penalties, dividend payment, dividend or profit or distribution to the owner, or any contingent or financial performance, drawing for personal use, recoverable input VAT, 50% of entertainment expenses of the customer or suppliers or shareholder, interest capping rule, personal expenses incurred to get non-taxable income. Again, this is the very critical point and challenging to understand. Why challenging this expense? If you look in a journal as a principle, as a generic principle, maybe it look like it's allowed. But if you go and see the transaction nature, then it will say depends. What is the depend? Because this expense incurred to get non-taxable income. Although this is allowed, but you spend or you incurred in which direction? What does it mean? If income is not taxable, this is we seeing the transaction level. Income is not taxable, so the expense will be taxable. If income is not taxable, then expense will be taxable or no? So this is called depends. This is very easy that you understanding and mentioning the no, but this is not this much easy. The reality, if you are focused and you are looking at transaction level, again, I'm focusing on the transaction level, the importance of the transaction level recording is very important. And this without the person who's handling the transaction level, if he's not aware, if he's not familiar, so the accuracy of the city return will be remain challenging. Because at the end, at the year end, if the tax consultant or auditor, they are not familiar, they go on sample basis. And the in-house team, the management, they're saying everything is correct, everything good to go. Okay. So this is the limitation of the external auditor or consultant or whoever the third party. I'm using the third party versus the in-house. So third party have the limitation. So this is the importance, or this is the reason why I come up and publicly this training event is launched, and I'm trying my level best to share the knowledge to the professional who are working in the accounting department. They still have the value, they still have the importance. you can improve your career by learning the taxation. Hope you understand this point. Losses incurred on non-taxable activities. Again, what is it? Point losses incurred on non-taxable. Understand? Non-taxable activities. Here, the expense incurred on non-taxable. Of course, we will dive in this and understand with the practical example also. Reasonable apportionment. Any applicant wish to give the example over here? Example over here. Any participant? I appreciate if anybody volunteer himself and give the example. Reasonable apportionment. Normally, the reasonable apportionment, we are saying if one expense, let's say the 100,000. So this expense have the private element. Have the private element. What the private element means? What this private element means? This is for business and for personal. Business versus personal or business versus non-business. Okay, we will use the business and the personal. So now maybe the 80% belongs to business, 20% belongs to personal. So is the third party or external professional can do this? Can he manage with this? If third party professional, can he do this? Just would you please quickly yes or no? If third party consultant or auditor, tax agent or the auditor, even they do, they need the support of accounting team. So this is the value of the accountant in the future. This is the value of the accountant in upcoming 1 year or 2 year. Why? Because so far still the error chances are higher. Our learning here, I'm not giving you a learning. I'm learning here while discussing with you, while thinking, how should I explain? I'm learning also. While preparing myself for this training workshop, I'm learning, okay, what are the core element I should share, or what are the perspective I should share, how the return will be fulfilled, how the person who's not familiar with the taxation. So I'm thinking in that perspective and trying to explain my level best. So I am student of the taxation. I'm not the expert of the taxation. I'm learning the taxation till today, and I'm trying to share with you guys also. And the same thing I'll try to share with the other tax agent also, that the another activity planned. Anyhow, here the difference, I believe you understand, and maybe the people agree with me or not agree with me, but I respect your understanding, whatever you have it. We are human, we cannot agree on the same point. Let's see the any other expenses as per ministerial decision. So now this point, any other expenses. So what does this mean? We have to keep follow the latest regulation. Latest regulation. This is my second batch. Some of participants from previous batch are also here. So why this second batch is coming, or why I'm still delivering this? Because FTA or the local taxation authority is saying regulation will be keep changing. Maybe last year or last month we have different regulation, and this after 1 month is a different. Earlier in last batch, we know that accounting depreciation equal to tax depreciation. This was we are seeing in the last training batch, or the as per the last previous regulation. But can we say now in 2025? So this is still valid or no? How many applicants are saying accounting depreciation is same as tax depreciation? Couple of months before it was same, but now it's not the same. So we will learn what are the difference, what are the challenging. This is the uh, regime, taxation regime that is the still under transition, still under implementation. So we can, if some of the participants they want to do themselves, please go online and search the Etisalat audit report. Search on the Google Etisalat audited financial statement. If you are looking for the common audit report, so let's focus on Etisalat audit report. It will be available online. You can search and download from there. Why? Because it's a listed company. This is public data you can get from online. And what is here the understanding focus? How many component of financial statement? How many people search so far for the Etisalat? How many participants so far search for the Etisalat? You can share the link in the group also. For the time being, if you guys would like to introduce yourself, we'll take the 5 minutes. And why? Because this introduction will have the understanding from we are from which background, like some people working in tax, some accounting, some any other task or industry as a consultant. So that will help in the moving forward our training session also. Or maybe the industry wise, like if we can give the introduction, my name is Mr. Hussein. I'm working in as the accountant in the real estate industry. And my profession is like ACCA, CA, ICAW. Or if you want to mention I belong from India, Pakistan, or any other part of the world. Only this summarized way, if you introduce yourself, that also welcome. Please let me go one by one. The first person is the Al Sidan. Sorry if the name is wrongly pronounced. Al Sidan accounts. Would you please unmute yourself and introduce yourself? Al Sidan is shown here, is active. Next is the Amjad. Even we come up with the active interaction, the people are not shown up. I'm not sure. Anyone? Okay. Amjad, you can prepare your small introduction and share in the group. That also fine. Or let's go in the same way. Prepare a small introduction and same in the group. Mute all. Okay, let's continue. Thank you, Mr. Hassan. Here's the important, you are from ECCA, and then the second, you are working in a manufacturing industry. That's also important because each industry have plus and minus. Other participant can share over here, and we can moving forward, but where we are here. Okay. We discussed this. We discussed this. So now we already said the 12th item under deduction. We are going to discuss this 12th item is starting from here. The first item listed below, grant, donation, gift to the non-qualifying benefit entities. Grant. See here, the important point is that the grant donation we can give to the qualifying public benefit entities as per the cabinet decision. As there is one list of the entities that FTA upload on their website, Imara portal. If you given to that entities, so if you given to that those entities or those organization, is it deductible? If you're not given, so then it's not deductible. So this is the important, we have to check the list that provided by the FTA, because otherwise if we're going to start the qualifying public benefit entity, so what is the criteria? So this will be relevant for only who's working in that area, how to get approved with the FDA. If anyone want to make the approval, this is the entirely the different. Most of the parties when introducing themselves. Thank you very much. And I believe they're also going to share with that. Okay, so the first we discuss one of out of 12, one out of. At this point, you can note wherever such thing is missing, it can be updated. Maybe it's hide. Okay, the second, interest capping rules. Interest capping rules, this is second point. So how much is a deductible and how much is not deductible? So the up to 12 million, we understand is a deductible and that can be allowed. And if you exceeding more than 12 million, it will be added back. So which article is dealing, corporate tax law article 29 till 31 is belongs to this. Belong to this. So here, if you want, see, even most of the people saying, okay, if we have to study from the relevant legislation, we can study. The advantage over here, you have structured from where to start and where this element is relevant and how to go to the relevant article and to read. Everything is integrated towards the corporate tax return. This is the most beneficial learning over here. And on top of that, on each article, you're getting the key notes, key understanding that make easier while going through or reading that relevant legislation. Okay, so now here the article 2931 dealing with the interest capping rule. Maximum interest maximum interest expense allowed. What is this? Here we mentioned the BEPS. This point was mentioned over here, taken from the BEPS OECD action plan. Anyone familiar with the BEPS? Anyone familiar with the BEPS? Any other participant would like to share his understanding? Any other participant? I appreciate your active participation. Anyone? I appreciate more participant to respond, whatever understanding you have, because this response will give me the idea from where I have to start while explaining this point, this topic. Still, people are not actively responding. Even if you don't have, just reply, not understanding. The BEPS, if we look into the history of the taxation, if we look into the history of the taxation from where the taxes started, the same way if we talk about the accounting, the IFRS, they're giving the guideline. Somebody have the started the accounting, then it came to IFRS or IS accounting standard. So there's one organization body who make. In the same way, if we thought about the tax also started any part of the world. The OECD, one of the body who's worldwide, managing the tax regulation or tax implication, who's taking the data from different region of the world, and then they are preparing the regulation over there to ensure what are the tax vision, how we can manage, manage the tax evasion, how we can control the tax to be paid in the country in which to belongs. The whole topic or whole scenario in one line: tax to be paid, tax to be paid in a country or jurisdiction where is relevant or applicable or due, where is